All right, welcome everybody to the advanced coaching call for Thursday. It's a special event today. We've got myself, Cam and Carol, and Wasim. I don't know how to say your last name very well, Wasim.
Karaguli.
Karaguli. And Omar will be joining us momentarily. And today we're going to be doing a Bitcoin update, and we're going to get into the Bitcoin proxy conversation a little bit, and what kind of stocks that are related to the Bitcoin ecosystem. We've got yeah, we got a lot of positive feedback on our last call we did for the introductory course, or sort of the introductory call. So we're excited to get into a more of advanced conversation around some of the opportunities that exist within the Bitcoin ecosystem. So for some of you, this might not be new information. For others, this might be new information. So we're happy to join. Oh my goodness, Matthew Todman is joining us.
Honorary,
Honorary founding
honorary.
member, founder of Theta Trading,
Excellence.
back from the cruise ship. He's here joining us. All right.
You're
Well,
on,
we're
you're,
gonna
you're
get
on mute,
cooking
Matthew.
here.
Yes, yes, here I am. Here I am.
Welcome, welcome.
Welcome.
Yeah, we've got definitely some, I think, veteran BTC investors on the call as well. So some of this stuff may be new, but some of it may not. But trying to we'll make it an update, like Cam said, and yeah, just to add a couple of things. And I've been getting a lot of questions as well over the last few weeks around just kind of what's happening and how to navigate and what's happening with Bitcoin and forecasts and tariffs and all that. So short answer is I have no idea. But
Yeah,
but
I don't
but
think Trump does either.
but
No, he
just
does.
just on that topic, right? We tried to kind of structure this a little bit, just to kind of touch on some of the kind of questions I keep hearing about, right? So Bitcoin, just give us the macro view, what's going on, like big picture, a little bit on how do we invest in it, to your point, like how do we get into the proxies, and we'll get into that a little bit more. And then how do I custody Bitcoin, and what does that mean, and like how do I even start, like what's all that about, like the whole self sovereignty, Cam's favorite topic, the independent man.
That's right.
All right, so we kick this off. Where do you want to start there,
Well,
Cam?
yeah, I mean, I think let's go. I mean, let's maybe talk a little bit about the Bitcoin macro. I think it's worthwhile. I think you've got, a great little segue into the companies themselves. I think the first step with understanding the opportunities that exist in investing in Bitcoin related companies is to understand the underlying, because
Right.
that's doesn't the companies themselves don't they don't conform to, it's like you're buying a commodity almost, right? I guess you'd say, like, but we'll get into that. Let's go into the first, let's go, Wasim. You take us away, man.
All right, so let's kick this off. Maybe we're starting about, well, what's changed in the spirit of what's been happening with tariffs and the deglobalization and all the stuff that's going on. In the context of that topic, let's maybe talk about, well, what is changing, right? Well, at least from a Bitcoin perspective, at least. And what's kind of driving a lot of some of the new technologies and the new thinking around how we restructure ourselves to kind of capture this new brave world. Well, so first of all, what's changing, right? I mean, I think if you kind of look at our lives, and we are moving into a 24/7 by 365 kind of world. Everything's on all the time. Crypto markets are on all the time. The Bitcoin network has been running since January of 2009, nonstop, minting blocks consistently. Unlike the markets that we trade in, the stock markets that trade basically only 19% of the time. If you do the math, it's 252 days a year. So you've got these kind of two different kind of universes, right? There's a concept of real world assets. I think you're going to start hearing this term a lot more. And this is really taking everything that is in the physical world and trying to model it in the digital world. We'll come back to that in a second. And this includes everything from like Apple stock to commodities. Like why can I not trade commodities in the physical and in the digital world? And obviously you can trade it in the physical world. Now we're starting to see it in the digital world. And the question is then, why can it not be traded 24/7? Right? Why can I only trade my Apple stock during those windows of trading? Sure, after hours, pre-market, all that, plus or minus, but in general, like the main trading hours are what's published there. So there's a lot of focus on tradable assets. Everything is real time. Like who reads the Wall Street Journal and the Global Mail these days to get their the real time stock counts, right? I mean, everything is real time. You kind of get it right on your IBKR app feed. Everything Jerome Powell says in real time. You can literally see the S&P 500 move when he's up on stage doing those press releases, right? Um, decentralized. So there's definitely a movement towards moving away from, you know, centralized corporations, everything being centrally owned, having a sort of, you know, a honeypot, self-sovereignty. We'll get into that a little bit, right? You kind of take control of your data. This is what Web 3.0 is all about, right? Like, think about all of the different places where you've stored your personal information, you know, SIN numbers and credit card numbers and address and phone numbers and all. Like, think of all the different applications and websites you've put that in. Imagine you could take control of that again. So that concept. That's kind of the decentralization push. Digital, I mean, that goes without saying. Everything's going, like, when was the last time you turned, you know, maybe some of us have this nostalgia of having a CD player or, you know, DVD drive and still using it, but most people stream stuff, you know, music, everything is streamed. Pictures, when was the last time you opened a photo album, right? And actually did that? I mean, sure, you may do it as for fun, but most of the stuff is on the cloud. So everything is digitized and it's becoming much cheaper. So everything is kind of falling to its marginal cost. It used to be very expensive to have a CD library. Now you pay 14 bucks a month and you're good to go. You've got Beethoven and Mozart and everybody in your pocket. So the world has changed. So everything's going digital. And that actually is very, very important too. If we want to move into this brave new AI data-driven world, well, everything's got to be digitized. AI is not going to work on the physical thing. It's got to be digitized for it to function. And then the last piece is money. What's the problem with the money?
It's broken.
Right. So, and we talked a little bit about it, you know, we've posted that YouTube video as well about inflation and debasement and how, you know, centrally controlled and all of that. So I think there's questions being asked, and you kind of see a lot of this tariff wars, you know, around. A lot of it is trying to also get control of, you know, the global reserve currencies and trade. And there's a lot going on there. But I mean, ultimately, you know, if we look at it just on our own universe, our buying power is depreciating. And a lot of that is a function of what's happening with central bankers and central banking decisions. So there's a real erosion of buying power, and we're seeing it. It's harder to stay ahead. People have a hard time to save. So those are all real things that are happening around us, and we just that this is the world that we're living in today, and it looks like it's accelerating.
I would just say on that one last point there, it's harder to save and it's forcing everybody to become investors, right? If you want to stay ahead, it's forcing people into the investing world to take more risk in order to keep pace with a growing, a larger debasement. And like the debasement is not decreasing, it's getting worse. So that's just it ties into this whole broken money conversation and how, having a solution to that is transformative.
Yeah, and on the point of inflation and debasement, it's a feature. It's not a bug of the current system, right? I mean, we went through that as well. If you go like the Bank of Canada, they tell you like 2% is the target rate. So it's a feature. It's kind of here to stay. It's not going anywhere. They try to regulate it. Sometimes it pops up to 9%, like we saw during COVID, and you felt it, but now it's down again. But it'll pop back up again. It always does.
Yeah.
Okay, so that's the brave new world we're in. So, you know, this is where, you know, we position ourselves. And again, this is a brave statement here. Bitcoin is the perfect asset. But why is it the perfect asset? Because if you kind of look at what we just described, the changing world, well, Bitcoin kind of fits into a lot of those dimensions that we just touched on. So it's 24/7. The network is always on. It's been on since January 2009, 100% of the time. It's real time. You can get real time data on chain all the time. Just anybody can do it. You don't need any tools. It's completely decentralized. You know, there's thousands of nodes around the world. It's a digital commodity, and this is not me saying it. This is, this is recognized by regulators in the U.S. that it's a digital commodity, right? And it trades just like gold. It's no different than gold. That's why you often see Bitcoin represented in a picture like this. It looks like gold. It's not real. There's no physical Bitcoin. It's all digital. But yeah, the visual that you see in a lot of the pictures is exactly that. It's represented by a gold representation of Bitcoin.
If you missed the last introductory update we did on Bitcoin, Wasim shared some amazing websites that you can visit to actually see live the blocks being, I don't know what you call them, being
minted.
Minted. I was going to say that, but I didn't think that was the right word for a digital asset. But they're actually being minted, and there's a ton of resources in that last video that you can, if you want to see exactly what it looks like, the blockchain being created ongoingly, go check out the last introductory. Not the last one, but there's a couple videos, but a couple weeks back, there's an introductory video. If you're watching this on YouTube, it'll be on the YouTube.
Yeah, absolutely. We could probably tag it down here as well when we post this. So So Bitcoin is effectively the hardest form of money, and this is not a stretch. It's an actual real statement, and the reason it's the hardest form of money is because it actually has the highest stock to flow. So it has a scarce finite amount that will ever be produced, 21 million. It is global. It's available to anybody, everywhere, anytime. Cam, you want to say something?
Yeah, you can read my facial
I can read
expressions.
your
You're
lips,
getting
man.
good, man. We're getting good at this. What do you mean by stock to flow? Let's just go into that a little bit.
Yeah, it's stock to flow is effectively, so stock is how much of it is available, and the flow is how much of it is going to be produced and how much of it is being produced. So you can imagine like gold, for example. Yes, gold and gold is a very hard form of money because it's very hard to increase the supply. Right, so it has a very high stock to flow. Unlike, for example, the housing market or silver, for example, right? If the price goes up, well, you just produce more of it, and that by virtue of creating more supply, the price, just basic supply demand economics tends to stabilize. So stock to flow is a measure of the scarcity of and how much of it gets produced, and in this Bitcoin halving cycle, the stock to flow of Bitcoin will exceed that of gold,
So
which means it's
it means
very scarce,
there's less of it,
less of it.
and they're not making more. Well, they're making it at a slower rate than gold.
That's right, right? And if you wanna take a quick look at that, right, we can actually see what that looks like visually, right? So I'll show it like this maybe on the block. You can see my you can see this time chain calendar.
Yep.
Okay, so you can see the total supply here is 19.84 million. That's 94.52% of the total supply, 21 million. So you can see the minting schedule, right? You know that every block they're going to every block 3.125 per block. So we know that the schedule, we can see it, and you can actually see the stock to flow. Like you can go here and you can look at the actual supply. You can see all the details, and I think somewhere on here they actually have the stock to flow. You can actually see it, right? So it's 115, and this means it's one of the hardest. It's one of the hardest assets on Earth.
You said it was 115. Is that what you said?
115, yeah, that's the number that I'm reading,
Stock
right?
flow is
115,
115.
yeah. Right, and over time, and you can see the forward-looking stock to flow moving forward, because the amount that's going to be produced is going to decrease. It will actually become harder. So that's the interesting thing with Bitcoin, is that it actually becomes harder over time.
And the feature of Bitcoin is it's an honest ledger. What you're looking at is one, I guess we'd call that part of the ledger. It's a look into the transparency that the Bitcoin ecosystem has in its basically, is part of the feature of Bitcoin is its transparency and this honest. Oh, you've got it written down there. Honest ledger. It's publicly available, right?
Yeah,
Jumping
and
ahead, man.
those are real words, right? I mean, they're not hollow words. It's a public ledger. Here it is. I'm actually looking at the Bitcoin, and this is the website I showed in the last session too. Like, this is the real blockchain right now. Here's the last block that was minted. Here's the transactions being populated for the next block. So if I look at this block and I click on it, and I can actually see, like, and anybody can. It's not just me. You can also see. Go to this website and just click on, you can see every single transaction. This is every single Bitcoin transaction in history. So it's not to the origin, to the beginning, right? So yes, it's perfectly public, auditable, and it's available to everybody. So it's very unique, very different to what we have today.
Yep. Decentralized, available to everybody.
Okay. So let's move forward, right? A few other
Yeah.
things. So what else does Bitcoin do? Well, Bitcoin is challenging the world, right? And it's challenging everything that and how we think about the world. So first of all, even our investment portfolios, because Bitcoin right now, and you're hearing this a lot, that from an investment portfolio perspective, looking at the last 10-year performance, if you look at 10-year blocks of Bitcoin over the last 10 years, right, it's significantly outperformed every other asset class out there consistently, right? It's not like a one-off, consistently. So the question then becomes, well, because you have to ask yourself, like, why are the institutional customers showing up and investing heavily in this? Why is the U.S. government suddenly talking about a strategic Bitcoin reserve amongst other nation states? Why are suddenly big pension funds starting to allocate some Bitcoin to their portfolios? And you look at this picture and you say, okay, This is probably why, because
Yeah.
you know the little thing in the corner there says the S&P 500 over the same period, right, over the last 15-year period, right, is 11%.
Yeah.
So if you add a little bit of allocation to Bitcoin, it'll juice up your portfolio. And you know, in the spirit of rethinking the 60-40 stock bond split portfolio, the traditional portfolio, this becomes an interesting asset class to consider, even in small allocations. Nobody's asking to put in 60% or 40%. Small allocations. Actually, BlackRock talks about a 2% allocation. Cool.
Michael Saylor thinks differently about that, but that's okay. We'll get to that.
Yeah, he's the Uber maxi, right, on Bitcoin. Well, we'll touch on MicroStrategy in a second as well, or strategy as they're called now.
Right.
New name. Let's see how many times we get that wrong on this call.
Yeah, no kidding, man.
All right. So and as an asset class, right? And you know, and we often get FOMO looking at the Bitcoin price because it started at 0 and today I think it's like what, 80,000, 79,000 last I checked, right? So we feel like, you know, we're very late to the party, and the reality is if you kind of look at the total asset, the addressable assets globally, and where they're kind of parked, you know, you see from a Bitcoin perspective that's actually less than 2 trillion. I think we're like at 1.7 or 1.6 trillion today. So it's literally a tiny fraction of the overall global asset landscape. So there is significant upside if any of this money suddenly shifts and gets reallocated, right? And strategy as a company, which we'll talk on a little bit more, is really targeting this block right here, right? Michael Saylor is also talking about real estate. Yeah.
Yeah.
And there's some, you know, there's a lot of real estate investors on this call. So yeah, you got to really think your portfolio. I mean, from a real estate perspective, if you're getting a 4 or 5% cap rate, and you know you could be debased because of regulation, because of, you know, taxes, because the city wants to, you know, zone the area differently, and suddenly that drops the value of your property. There's real risks, right? So, so people are starting to rethink their real estate portfolios and looking at other alternative asset classes that are potentially emerging that can create a much better return and help you overcome the hurdle rate, right, of debasement and monetary inflation.
Yeah, without all the issues of real estate ownership, right?
Yes, which
No
we've all
tenants,
experienced. Yes.
you know, like expenses aren't going to go up on you. There's not going to be the government taking a piece of your, you know, increasing your taxes. You know, we know how that's looking, you know, in general around, you know, cities are not making more money these days. They're not the most solvent. And so, yeah, your real estate is exposed there, where it's
Yeah,
not.
you're right, and the reality is, I mean, most people park their money in real estate, not necessarily because they necessarily want to get the you know, the cash flow or anything. There's some of that for sure, but it's mostly a store of value, right? I mean, they don't get a lot of utility. If you have 16 properties, you're using one, maybe two, maybe three properties, right? You've got one in each town, and one on the beach or whatever, right? But you're not using the other 13 that you have in your portfolio. So you're really doing it just as a store of value. So if you had another vehicle to allow you to also get the upside and have that store of value, you know, people are considering it, right? And that's why people kind of move their money between these different kind of asset categories, because whatever makes the most sense at that time is where capital will shift. So this is where Bitcoin is playing. And I think people misunderstand that. It's not just a tradable thing that, you know, you make money on short term, which, yeah, you can trade it, no problem. But people are starting to think about capital allocation moving forward in the brave new digital economy that we're talking about. The first slide I talked about, the world is changing, which means the asset allocations and capital flow should also follow that. There's more money that's going to move into the digital ecosystem, whether we like it or not. It's already happening. You know, when was the last time you opened a photo album, right? Everybody's doing it on the cloud, following it on their phone. You have more digital power on this small gizmo here than we've ever had in our lifetimes. And it's only going to get better.
Yeah.
Everything is digital. There was a point. Sorry, go ahead, Cam.
No, it's okay. This chart really, you know, if you ever want to talk about the idea of an asymmetric opportunity, this is a visualization of that. You know, if you ever wanted to be early on something, this is what early looks like. you know?
This is why we keep having these calls, right? Like the more we can get people to at least understand the opportunity, and the sooner that there's no need to FOMO. We're early. Sure, we didn't get. By the way, everybody in the Bitcoin community has FOMO. Like everybody wishes they started when Bitcoin was only $0 or $1, and there are a few people that still have coins from that era. They're few and far between. They probably don't vocalize it. They'll never tell you that, but there are quite a few that have coins from that era. But even buying it now, it feels crazy. But this is the opportunity, and you have to kind of think about the market dynamics.
Yeah, and like we're this call we want to talk about, we're going to get into strategy, and we're going to get into the ETFs. We're going to talk about what those represent as opportunities. And you can't understand those opportunities unless you understand Bitcoin, unless you understand what they're holding, right? And traditional finances, and maybe I don't want to jump it too far ahead. If we're going to get into this down the road, but traditional finance views a company like Strategy with question marks, because it doesn't fit into the paradigm that traditional finance has been accustomed to. And that paradigm, we've touched upon. What does that paradigm look like, Wasim? Like, what would be the paradigm that traditional finance views the world, and how does Bitcoin rub up against it or conflict with that? How does it become how is Bitcoin abrasive to that traditional finance view, and why is it so hard for traditional finance to see what they're coming? They're starting to come.
Matthew's on the call. We should probably ask Matthew that question, right?
That's not fair. That's not fair.
But I'll just put one perspective and then maybe leave the floor to Matthew, because I mean, from my vantage point, what I see is you've got this Bitcoin crowd that is very bullish on Bitcoin, and they see the future potential, and they're bought into all the ethos that I described. But they don't understand traditional markets and which what we call TradeFi, and how capital flows in the current markets today, the bonds and the treasuries and the real estate and everything we're showing in this picture. So you got the Bitcoin crowd that doesn't understand traditional finance, and then you got the TradeFi guys that are cast in their ways. They know how to build a DCF model. They understand valuations. They have a system, even though I'm not quite sure we have a system that kind of we operate under that, but they don't understand Bitcoin. And they just lump it into this crypto pile of stuff, right? And it's very highly speculative, and it's very volatile, and there's no real investment if time to learn and understand it. And I see this kind of two very distinct camps, and you've got silos. And part of the effort we're trying to make here is try to at least show people that there's actually quite a bit of overlap here, and I think they're going to converge. That's what Michael Saylor is doing a lot of.
Matthew, you want to jump in on that?
Well, I mean, listen, so full disclosure, I do own MicroStrategy myself. I'm quite happy with it. I could be happier, but
you will. Just be patient.
Yeah, come on. This is
value. I mean, well, listen, it is like any other asset. It's going to go up and it is going to go down, right? Now, commenting on the traditional finance sense, this is an asset that has decided to run a software business, and it is also a stock that has decided to have a Bitcoin holding. So it's this, as you were saying, it's a store of value, right? Am I going to criticize a company that's holding Japanese yen over US dollars? No, like that's their decision to make, right? It's my decision to say, hey, do I like that exposure or not? So I see Bitcoin from the MicroStrategy or Strategy's perspective as, listen, this is a diversification of their holdings, and this is how they're going to store value. Fair enough. I'm looking for that exposure. That is a tool I can use to get that exposure, right? That's the way I see it. Maybe it's too simple for you guys, because you guys, to use Ivan's word, is orange-pilled, and I certainly am not. But I do see Bitcoin as a potentially advancing asset category, and it has a track record to prove that. And you know what? I think there's more blue skies ahead, but there's, you certainly need to navigate through some rough waters to get there. But I think that is also due to that is also that's the characteristic of any new asset category. It has yet to be proven and accepted by a broad range of people, right? And
that represents the opportunity.
That represents the opportunity. Like in 20 years, when Bitcoin has been around for like what, 40 years by then, maybe, right? Or 30 years by then, this will be a much more mature industry. And if history has told us anything, it is that the more mature an industry gets, but potentially the less volatile it gets as well, and then
Yeah,
potentially the less opportunity that you may have.
correct. Um, that's great. So the one thing on the TradeFi side of things that I always think about, like the traditional finance views Bitcoin and sorry, traditional finance views assets from a credit-based, like a debt-based system, right? Which is what US dollar is based on, and Bitcoin comes in and it's not. There is no there. This is not a debt-based asset, right? This is a finite supply that is the most accurate measurement of liquidity in the world. It moves, as we've already talked. This Bitcoin measures money moving around the world, like in real time. And so,
Right.
and it's decentralized. So it's this representation of the free market, right? And I think traditional finance has a hard time with it because of that, partially anyway. That's my thought process, is that it has this difficulty with this fully free market that exists in absolute real time, and they can't put their finger on it because it's not moving through the centralized channels that it's accustomed to, right? And there's this, we have to like look at the stock to flow, and it doesn't make like where does that coming from? It's just, it's a free market. So I think that challenges the TradeFi folks a bit.
If you this is where the education comes in, I think, right? Because if you kind of go back and look at, capital and where that all came from, and fundamentally it boils down to money. I mean, we talked a little earlier about, it being the perfect asset and money being, uh, part of this conversation of how the world is changing. Well, if you go back in history, we evolved, and money has been, we've always gravitated towards using the hardest asset as our form of money. That's why
Mhm.
gold, people kind of globally recognize it as a store of value, because we can always rely on it, right? And the reason we can rely on it is it has a relatively finite supply. So we always gravitate, as a human species, we gravitate towards the hardest form of acid, whether it be the shells or salt or whatever that is available for us in the local community that we all agree on has the highest form of value that we can actually trade with. So we have to rely on some form of money for trade. That's how we
Yeah.
function in the world. And what you found happened in the early part of the century, so we got to go back a little bit to understand where this all is coming from, is trade started happening a lot faster than the settlement of gold could keep up.
Hmm.
And as we move forward in the digital economy, so that's why you see the dollar became the global currency of the world, because we needed a capital system. We needed a way for us to trade that goes faster than the ability for us to transport gold and settle with gold back and forth. So the capital system was born. We were able to then trade with basically a ledger. Like, I owe you this, you owe me this, and we just keep track of that, and then we settle. And
Right.
we settle digitally. So that separation is an innovation. We found a better way, right, to trade and to transfer value. We use what we call currency today. We chose to make it money, the $100 bill. We've all agreed that this is the thing we're going to use. So, well, why can't we pivot again?
Yeah, and we are. And I think that the the promise of Bitcoin and the hope of Bitcoin and the why there's such a hardcore belief in it amongst those who understand it or those who investigate it deeply enough. If you spend enough time on it, you start to discover this. The hope of Bitcoin is it's an honest ledger. And that fact alone, we've never had in history, a
I
decentralized, honest ledger. So fully auditable by anybody. Imagine this.
it's a foreign concept, Cam. Like what
Yeah.
I know it's a simple word to say, but you try going to the Bank of Canada, or the Royal Bank of Canada, I should say, or your local branch, and ask them to see the ledger. What do you think their response will be?
Go to hell.
They'll call security on you.
Yeah.
Right? So, I mean, that's the nature of what we live in. We're just so used to the centralized. There's some authority that tells us, no, you can't. That's just the nature of how, we've at least my adult life, right?
Yeah.
That's what I know. So suddenly there's something that shows up and says, we don't need any of that. We have a technology. We can trust people to do it, because, traditionally, again, the bazaar versus the cathedral, right? Bazaar, that's how they function. Like, you go to the bazaar, the local shop owner that and even if you don't know, like, you just have a company and you just You have 30-day terms for payment. Well, that's a form of a ledger that we're tracking. I owe you, you owe me. We just keep track of it, and we settle, and life is good.
So that promise or that hope is, and maybe, people don't look at it quite that way yet. And that might be, that might be a bit of a stretch for some people on the call or to people listening to this, if you haven't moved through the process of understanding what it is. That promise or hope, when you're investing, it has a different way of moving through the market. And I know that's a bit esoteric. It has a bit of a different way of living amongst moving in the market. So I'll leave that. Let's move on. I won't go too deep. I won't double click on that idea too much.
Okay. So speaking of moving on, right? So the US government has moved on. They have a new president. They have a new direction. They have established the strategic Bitcoin reserve. They are not selling their existing Bitcoin. There is some speculation that they are going to buy more, even though it's going to be in a neutral in a neutral way, where they're not going to actually invest taxpayer money or spend taxpayer money. We'll see how that pans out. But it's very important to recognize, like, this is the press release that came out from the White House, where they recognize as Bitcoin as the original cryptocurrency, and they refer to it as digital gold. They've done their homework. Somebody at the White House has done their homework.
They absolutely nailed the strategic Bitcoin reserve. And I think we talked about it at length in the last call, so we don't need to dive too deep into it.
Right.
Yeah,
but you've got the Treasury Secretary, who's the Banker of the US, now saying it's a store of value.
Yeah. I mean, like, newsflash, like, hello, didn't see that on our bingo card last year, right?
There's an interesting maybe point here, right? So what you saw yesterday was a bit of a rug pull, and there's some argument that it was, and again, I guess we'll see where this all ends up, but there's a bit of a rug pull on the Chinese, right? That this whole tariff play was a bit of a rug pull on the Chinese, and they've been sent a bit of isolationist policy. But in history, the Chinese have made mistakes in the past. Like, they actually the world went on a gold standard, they went on a silver standard, and that was the wrong call for them. They spent the last 100 years trying to recover from that. Now they're stockpiling gold. So the Russians and the Chinese are heavily stockpiling gold. The US still has a large reserve of gold. But this may be the next rug pull. I don't know. We'll find out.
Yeah. Rug pull on the Chinese, you mean?
Yeah, exactly, right? So now the Chinese are stockpiling gold. If the US suddenly pivots and goes into digital gold, thought experiment. I don't know, right? Could this potentially be the next rug pull, right? For the next 100 years? I don't know. How do you maintain global dominance of the US dollar, right, as a global reserve currency?
I think
maybe there's something going on there.
Yeah, I think from an investor's point of view, from if I just look at this from, like, okay, I'm trading, I want to invest. This just is very bullish on the asset, right? When sovereign nations are starting to adopt Bitcoin, right? That's just emboldens the whole case of investing in this asset, and there's a bigger conversation I know you're pointing to there, but let's keep going.
And you could argue this is all priced in already, and it may be. This is why Bitcoin hasn't gone to the moon. It's gone up. It hit 109 as a 108 and change, but at the end of the day, it's still significant upside. We'll see where this goes. Okay, Bitcoin for corporations, and we'll get into more of this, right? But it is important to recognize that Bitcoin and companies are starting to realize that it creates performance, it increases volume, it definitely feeds volatility, which is fantastic for options traders like us. And then it increases interest in the company. If you're a zombie company, GameStop is starting to buy, which is probably the zombie company, right? Or at least recognized within the retail community. There's interest in GameStop again. They're looking to allocate and buy some Bitcoin. So I mean, I've shown this.
Some being like 1.6 or 1.9 billion dollars worth of Bitcoin to start, right?
It's not, yeah, it's a chunk of change, definitely, right? It's a chunk of, now where they're going with it, I don't know. Like, what's what Ryan Cohen's kind of long-term plan with it is, I have no idea. But it is definitely going to stimulate some interest.
I'm watching it, and I actually dipped my toe into it.
Oh, really? Oh, tell us more, Cam.
Well, I bought a call. That's all I did. I bought a
All
call.
right.
Bought a
Okay.
call
All right.
for the summertime, but not
So
NFA, not financial advice. Just explored it, right? Like, and it's been interesting to watch how much gravity that stock has had against this decrease, the declines. It's. Look, I'm no fan of. I don't even really understand. I'm just playing in the risk part of my portfolio. Like, let's buy some calls here, see what I believe that when they do announce more of their Bitcoin holding and when they actually get some holdings that, I think we could see a significant interest, right? And we'll see that price go up. So, um, yeah, I wrote some June 20, bought some June 20, July 20, June 20, I can't remember calls.
you're a brave man, but I see your point. Like your thesis is this thing's going to go through the moon, right? And you're
It
going to
was a
cash in
little,
on those calls.
it's fairly speculative at this point. I mean, right?
So here's an snapshot of MicroStrategy, and the MicroStrategy playbook is, or strategy, the strategy, they've changed their company name to Strategy. And you see, I mean, they're outperforming the Mag 7. They have, and Matthew, he mentioned he's got some in his personal portfolio. They have historic volatility relative to the Mag 7 again, or any actually. I think they're up there relative to all other stocks in the market that are heavily traded. I'm not talking about the small ones, but and then average trading volume is and interest. So you've got actual real data, and by the way, this is published live. We'll go on their website and check it in a sec. But they publish the data effective, almost live, almost real time, because it is a data analytics company. So they're hanging their hat on this stuff. Okay, and then what else? So that's companies, and then so Bitcoin is as a platform, and this is something again where the education comes in, right? Like you just need to do the time, and you got to spend the time to educate yourself. It's a new protocol. It's a new way of embracing the digital economy. It's a new way of, just like we got used to using this for Apple Pay, and some of us don't even have a wallet anymore. We just go and tap, right? It was a brave new world, right? So this is part of learning that new brave new world and learning the ropes.
I don't know if we're going to talk more or if you have any more slides on strategy going forward.
There
Do
are,
you?
yeah, there's a few,
Okay,
yeah.
so go ahead. Then we'll just keep
And it's coming
plugging.
up next, actually. So, let's
Let-
dive into that, right? So
Okay, let's go.
busy chart, right? And all this is showing is just kind of performance, right? This is all the different asset classes. Some of you guys have seen this before, right? Um, uh, Bitcoin is by far the superior asset class. Highly volatile, yes, of course. We can have that conversation all day, all night, right? But at the end of the day, it definitely has demonstrated its performance. But that doesn't come without significant downside as well. So it's a roller coaster, no doubt. It's early, as Matt was saying, right? You do expect, and you can kind of visualize a little bit, right? Like you just kind of eyeball this quickly. I mean, you're talking about returns in its early life, right? When it started 2009, so it's 15 years, 14-year asset class. So I mean, there are definitely cycles where it literally just, I mean, returns were crazy, and you see that it's starting to now, to taper down the volatility a little bit, which actually means maybe it's starting to approach the teenagers,
Yeah.
right? It's not quite mature yet, but there's interest, especially from institutional customer governments, as we just showed. Corporations are starting to dip their toes in, and some more than their toes, and
Major
for good
institutions
reason.
like BlackRock, the biggest company in the world. I would think that BlackRock's the biggest asset holder in the world, and
Yeah.
they're doing presentations about Bitcoin being to their investors as a way to avoid the debasement of the currency. These are all signposts for a growing asset.
Yeah, and even the recent decoupling. I mean, generally speaking, Bitcoin's been trading more or less like a tech stock with the Nasdaq
Right.
this year, maybe even over the last year. But this last cycle, like literally the last month, there's been a little bit of a decoupling. You see the Nasdaq has dropped quite heavily. Bitcoin dropped, no doubt, but it's stabilized. It hasn't fallen below the 200-day moving average. It's sitting there around, 880s, right? I think just dropped maybe to 78 or something, 79. Great,
Yeah,
great,
it was
great
down in
buying
the
opportunity.
Yeah, I mean, look, everything, what do we see in the last, yeah, I mean, I don't have my exact numbers in terms of like the S&P versus some of the tech stocks and how far they've moved, right? Like 10, 15, 20%. Bitcoin moved like 5, 6% or something like that. Like it was very interesting to watch a historically very, very strong usually leading the risk asset camp in declines, right? When risk off happens, historically Bitcoin would be the leader and it would go farther and further, faster. And this time it has not, and it's been very interesting to watch that.
And to give you an example of what you just said, Sunday evening, Bitcoin dropped like a rock, right? And then shortly after that, the S&P 500 futures dropped like a rock. And then when the market opened on Monday morning, the market dropped like a rock. So it's starting to, yes, be a leading, because it's open 24 for business 24 by 7. Like Bitcoin does not turn off. There's no such concept. It's always running. Just like the global trade of the world, just like the internet keeps running. You don't turn the internet off. So
But
why would we turn our stock market off or our
on a
trading
percentage,
off?
oh, sorry, Wasim. On a
Yeah, go ahead.
percentage basis, the declines that happened on Sunday night versus the declines that happened at the on the market, like in the equities, it was much lower. Like the
It
Bitcoin,
was.
it was just a signal, like it dropped
It
a
was a
little bit, but
signal.
the equities really dropped. And I think that was people selling off on Sunday night, the hedge funds getting out of some of their Bitcoin because they were worried about the Black Monday event that was happening. And so I think that little sell off that we saw on Sunday was that, and them coming into
Yeah,
just to hedge their position so they didn't get margin called on Monday morning.
you're right. And I mean, yesterday in the market when it had its sugar rush yesterday, I mean, Bitcoin
Yeah.
moved $9,000 yesterday. Like you could have traded, bought Bitcoin at the beginning of the day and made 9,000 US by the end of the day, right? That's kind of how fast it moves. And $9,000, by the way, is like a small move in the Bitcoin world. Nobody even, that doesn't register for most people.
So when I look at this chart, the thing that I think I want to mention is thinking 4-year terms minimum. That's how I think about holding Bitcoin. To avoid, you don't want to be trading 1 year. I don't think about trading 1 year. You don't want to lock in, you don't want to have to be thinking, oh, I've got some savings. I'm going to put it in, but I'm going to need those savings in a year or two. And you don't want to be caught in that year or two in a major decline because of these 70% rip your face off declines that happen from time to time. Right, you can see them in 2018, you can see 60% in 2014, you can see a 70% in 2022. But overall, if you've hold for more than 4 years, you're in, I think we're at the lowest 4-year compound annual growth rate we've ever been at in Bitcoin. It's an interesting time.
It is, yeah. Bitcoin's down year to date, which is uncharacteristic for where we're at right now in the cycle. So,
And I would say that's more of a liquidity conversation than a Bitcoin conversation. Like look at everything.
could be.
Everything's down, right?
Yeah,
This is a liquidity conversation. Like there's just not
yeah.
enough money floating around the system. The tightening that's been going on. So anyway, that's going to change at some point. You know,
I
we'll
always try to take solace in this last line here, right? Like best performing asset class.
yeah.
Because most of the time you see this chart, they don't include Bitcoin. But if they did, your mutual fund portfolio would get literally blown out of the water. So this is not something that your typical TradeFi investment portfolio manager wants to share with you, right? And in fact, if you tell them I want to put Bitcoin in, they'll probably push back and say, I don't think that's a good idea. This is
No,
where you need to educate and do your homework yourself, because unfortunately you may have to ask for that because it won't come organically.
that is the asymmetric opportunity. Education of 100 hours what is your barrier of entry to make a confident decision into Bitcoin, right? But I know a lot of people buying Bitcoin and they don't fully understand it, but they get it. They're starting to get it, and But I would encourage you to not be that person.
Well, I would argue as well. I mean, do you really need to understand everything about it to use it? I mean, the internet, let's just look. Does everybody on this call
Right.
know what TCP/IP is? Like how DHCP works and how,
Right.
when you type a website in, how that gets resolved on the back end and you get pointed to an IP address? Do you even care?
Well, I'll care when, not about maybe not the under the hood stuff, but the fundamentals of like, it's
Sure.
decentralized, it's secure, there's only 21 million. There's all these, companies starting to use it. The trend, it's a transformational technology that it's a protocol that anyone can plug into and build like these kind of things that like because when the market takes a big dive and a big dump and when it drops 60-50% or however that next large correction is going to look like, you're going to be asking yourself, why am I holding this thing, right? And then
Yeah, you need conviction.
if you understand, you need your conviction. Yeah.
And conviction is only going to come with the education part of it.
Yeah.
So, it's okay to start using it dip your toes in, do some small allocation that you're comfortable with. And that, anything non-zero, as long as it's non-zero, you pick whatever number is comfortable and suitable for you. And as your conviction and as your education journey continues, then you increase your allocation. But you don't necessarily need to know everything about it, because it's also an evolving system, just like the internet is an evolving beast, right?
Yeah. Well, I mean, I don't.
If quantum computing happens, we have work to do to maintain the internet, right? Like, because cryptography is all broken. So do you need to understand everything about quantum computing to start using the internet again? Or can we just rely on the fact that, okay, we'll figure it out?
Conviction is all I was pointing to.
Point taken. Speaking of conviction, BlackRock has a lot of conviction. So they're saying, 2%, right? So, and it'll make a big difference in your portfolio returns, from a, 10, if you look at a allocation to the SPY over a 10-year period, this is your return versus slight allocation to Bitcoin, you will have a significantly better return. And, this kind of makes sense looking at the previous data that we just showed. So putting your portfolio on steroids. And more
That's amazing,
importantly,
When you look at that numbers, like just a 5% allocation to Bitcoin gives you over a 10-year period. I don't know what they're basing this on in terms of the, but that's like a double 238% return in the S&P versus a 554% return with a 5% Bitcoin allocation and 95% S&P. It's amazing.
It's early days. So what if you wanted to buy it yourself then? So what would you recommend here, Cam?
Well, I personally use Bull Bitcoin. I know the owner of Bull Bitcoin, and I've met him, trust him, and I've used ShakePay. You want to that's what I'd recommend. I mean, you want to, open an account, get yourself going, get some money into the account, buy some Bitcoin, and then, with the self-sovereignty thing, the self-custody thing is a bigger conversation. I don't know if we have time to get into that right now. If we were going to touch on some of the strategy and some of the ETF stuff, but did you want to go into that a bit, or I think we should.
That's coming up next slide. Yeah.
Okay.
Absolutely. So if you want to buy it yourself, key message here is there's tons of ways to do it, right? If here's some recommendations. I personally use Newton. I know Ivan is on the call. He uses ShakePay, but there's Bull Bitcoin is only doing Bitcoin. So, but I just want to leave everybody here with one key thing: is we always talk about buying a Bitcoin. I think you need to understand that you don't need to buy a Bitcoin. You can buy a Satoshi, which is a lot smaller. There's 100 million Satoshis is one Bitcoin. So you can just start with buying sats. And literally, I think today, if you look at what is the spot price today? What is it? You can go to Clark Moody and you can see sats per dollar. So today, 1,263 sats, Satoshis, is $1. So you can start literally with like 50 cents, $1, 10 cents, whatever you're comfortable with. But it's very easy to do. So
yeah, and DCA, as Ivan said, dollar cost average into it is the strategy.
Absolutely. Yeah. All right. So to Cam's point about proxies. So let's talk about that. So this is if you don't want to buy Bitcoin spot.
Yeah.
So, how do you get exposure to Bitcoin?
But it's also a way to, yeah. Okay. So if you wanted to invest using options, for example, right, which we all love doing, right? We love harvesting the volatility to make premium. And with Bitcoin being an incredibly volatile asset, as we've seen, and moving up and down, lots of volatility, there's different ways to access that volatility, right? So, we've got the.
Let's take some examples.
Sure.
So Bitcoin ETFs. That's probably the easiest way, right? So you don't want to self-custody because buying your own, like you said, you use Bull Bitcoin. Well, to use Bull Bitcoin, you have to have a wallet that they will try. They will not. Their business models, they don't custody your Bitcoin. They don't have a database where they store your Bitcoin or a safe where they put it. If you want to use them as an exchange, you send your dollars. You want to buy Bitcoin, they will do that transfer for you. But you need to give them a wallet address that says the Bitcoin that you just bought me, send it over there, and I have self-custody. They won't do it otherwise. It's not like Newton or ShakePay will allow you to kind of keep the funds there in their wallets, but that's counterparty risk. That's third-party liability.
Yeah. Wasim, you want to highlight that is like the most secure, the safest way to hold your Bitcoin is is to hold it personally and to hold it in cold storage in a wallet. And then that for some of you who don't understand that's maybe that's a conversation for another day, and we can maybe dive into that someday. But we wanted to really just kind of get a little bit into this idea of that there are these companies that hold the asset on their balance sheet, and you've got the ETFs like BlackRock, IBIT, and they've basically got a 1-to-1 allocation. So they've got an ETF, you can buy the ETF, and the ETF has they buy Bitcoin and hold the Bitcoin in Coinbase. So they have a custodian that holds that Bitcoin on BlackRock's behalf. It's something to be aware of. Fidelity owns the Bitcoin themselves. Like they actually cold storage and they have their own custodial process to hold the Bitcoin. And that's something to consider if you're going to be going hard on this stuff. If you're going to go into BlackRock, you're going to own like a sizable portion of BlackRock, you want to understand that there is a potential risk there that you don't want to hold your life savings in an asset that is being held somewhere, especially a digital asset that you don't want an FTX situation to show up someday and you lose all of your access to your investments, right? So owning BlackRock, IBIT or Fidelity, FBTC, you're trusting other people to hold your Bitcoin. And it comes with its risk. It comes with its advantages too, though. And those advantages are that you can write puts, for example, on these companies, right? So the premiums are great. The volatility is strong.
Absolutely.
And I don't know how many of these you want to go through the ETFs. I'm actually not familiar with all of them. I mean, BlackRock,
Some of them are
Fidelity.
Canadian based. Yeah, there's a ton of them, right? There's quite a number of them that are coming on. So each one has their own characteristics, their own fees associated with them, their ETFs.
Yeah.
But yeah, like Cam is saying, I think the custody aspects is something you want to study. And you have to kind of think about what your long-term thesis is. Like if your long-term thesis is just to kind of buy and hold them or just trade them as, tradable assets, then that's fine. I think if you want the exposure to the price of Bitcoin, these are perfectly fine. If you're looking
Yeah.
to do a long-term hold, nothing beats self-custody. That's
Yeah.
the ultimate way of moving forward with Bitcoin as a store of value.
Yeah. I love you. Keep coming back to that. I appreciate that about you, Wasim.
That's the next section, actually, self-custody, man.
Let's
I
go
threw
to the
that in
middle
there.
section. Let's jump into the Bitcoin treasury companies.
One thing I just want to, just on that
Okay.
note, and
Yeah.
similar to the Bitcoin treasury companies, just keep in mind, Bitcoin trades 24/7. These companies do not, right? Like so BlackRock will stop trading and Friday evening and then pick it up again on Sunday evening, maybe, or Monday morning, right? So if anything happens with the Bitcoin price during the weekend, which normally does, you may not actually get exposure to that price action until the market opens. And it's a similar kind of, it's a slightly different behavior with these Bitcoin treasury companies because they do buy Bitcoin. That's the big difference. They do buy Bitcoin off hours. They buy Bitcoin all the time.
So, let's talk about strategy a bit. That's the one I know the best on there, really. I know a little bit about Metaplanet. I mean, strategy is, I mean, they're basically they're a treasury. They're using, so they were a company they were a tech company that was not doing well. Essentially, they were a software company. They weren't doing so well. Michael Saylor discovered the Bitcoin ideology, or if you could say the ideology or the what the asset is, and started placing on his balance sheet. And then as that business model moved forward, he was able to borrow money at very, very low rates, 0% interest rates in almost all cases, most cases, for great terms, and able to purchase more and more and more. So they've owned now 500, and somebody posted it in the chat here, I think, how much Bitcoin they actually own on their balance sheet. And so, whether you can go into details, you can look into it. All this information is available on this strategy, the website that's being shared right now. So 528,185 Bitcoin on the balance sheet. And what happens with these companies is like the volatility is like, is it 2x or 4x? I forgot it's of Bitcoin. I think it's 2x. The MNAV?
Yeah.
Is that the volatility? MNAV?
No, that's not the volatility.
No,
That's
no.
just the,
Yeah,
so
so
what are you
like,
looking for? The volatility is here.
yeah, so you got 2 times volatility then, right? So Bitcoin's volatile. Strategy is twice as volatile. And that means the premiums are very strong, and this is like the strategy is creating this volatility nuclear reactor, and and that's sort of they've just been able to, like, volatility is health, as Michael Saylor says, and volatility allows you to, like, really harvest this premium off this asset. And the way I like to think about strategy is it moves, it's like a sine wave over Bitcoin. So Bitcoin moves in, and then MicroStrategy moves in this highly volatile sine wave around the Bitcoin price. So it'll go above it and below the Bitcoin price. So you've got this sine wave that's moving across Bitcoin's trajectory. And yeah, anything to jump in there, help, anything on that, Wasib, that you want to add?
Yeah, no, absolutely. I think you covered it well, but I mean, just to kind of put in, there's a lot of numbers on their site, and you can get a better feel for their strategy. But ultimately, it's exactly what you said. So, he's been purchasing, and you can see the purchases. These are his Bitcoin purchases, Saylor Strategies Bitcoin purchases, all the way back to August 2022. Every single purchase, the price they purchased it at. You can see the total acquisition and the average price. So if you average everything here, right, their cost of buying all of this is the acquisition cost, is 35 billion, and it's worth today in the market 67 billion. So, and the price of Bitcoin today is, I think, what is it, 79 right now? So at the end of the day, I mean, here's a company that owns 2.2% of the entire Bitcoin supply, and their target, I think the speculation on what his goal is, but I think the target is for him to hit 1 million Bitcoins, right? So, he'll own 5% of the Bitcoin, total Bitcoin supply. And that gives him what we call optionality. Like, imagine a company that owns whatever this value is of this asset is going to be. Let's call it $1 trillion. Let's say Bitcoin increases in price. The assets that he has to today, if you look at basically, these assets, right? So they are going to grow in value, and as this asset base grows, well, this gives him options of things to do with that. He can lend it out, he can spend it. I don't know if he will. He says he's not going to sell any. We'll see how that pans out. But there's tons of opportunity here for a company that suddenly has a huge asset on its balance sheet.
Yeah. So worth investigating. What about what are some?
Other companies are doing the same. I was
Yeah.
just going to say, like, so like, it's not that playbook is published, and you can actually, you can just literally, I mean, MicroStrategy or Strategy and Michael Saylor are actually encouraging you to copy the strategy, right? So there's actually a real motivation here to get other companies to think about this, because at the end of the day, I mean, as a capital allocator, as a CEO of a company, your job is to make it profitable for shareholders. We're shareholders of Apple or all these other companies. The CEO's goal is to make money for the shareholders, right? That's fundamentally what it boils down to. Sure, make great products and all that, but ultimately that's their main goal. So if you have capital and you're generating revenue and you are accumulating that capital, what are you going to do with it? I mean, you can give it back to your shareholders in form of dividend. You can do stock buybacks, which is what a lot of them do. But stock buybacks essentially means that you don't know what to do with it, so you're just buying stock, right? Well, why don't you invest it to do something productive with it? Like, what's the utility that you're getting out of that by giving it to people through dividend or buying back your stock? Why don't you invest it into R&D, or why don't you? And they do. Some of these companies do, but some of these companies that pay tons of dividend don't. So here's where the opportunity lies, and the strategy that strategy is following is to say, well, what is the hurdle rate? Like, if there's a better asset for you to put your capital into, then do it. But if there isn't, then put it into Bitcoin, because you saw the returns, right? Even if you do a 30% CAGR year on year, which is actually quite conservative,
Yeah.
that's quite a good investment of your capital. And your shareholders will be quite handsomely rewarded for that.
So some of the other treasury companies out there, Metaplanet, I can speak a little bit about. They're only available in the Japan market, so you can't access it in the U.S. market.
They're trying, though. They're
They're
trying.
trying, yeah. They're a real estate company that did the strategy, and yeah, that's about
Semler
as
is a
much as it.
healthcare company, right?
Okay.
Some of these other ones, I think, Cooler. Each one of these is a different, it's completely different industry. But the point of the matter is here, like, some of these companies hold. So companies cannot hold stock, right? They're not allowed to hold stock of other companies. So you have to hold something. You're either going to buy treasuries, or you're going to, do some of these vehicles, these capital allocation vehicles. So looking at Bitcoin as a way to preserve your capital is definitely being looked at by many, many companies. Bitcoin, actually, Microsoft did a vote recently. The vote failed miserably, right, at the with the shareholders. But the point is, companies are starting to look at it. I think Amazon did the same. I know Facebook has started to kind of think about it a little. Tesla's already has acquired some. So I think you'll see this become more and more prevalent. So this is another, coming back to, you know, the exposure to Bitcoin. This is absolutely a way that you could get some exposure to Bitcoin, although there are levels of separation here, because ultimately you're investing in a company. So
Yeah. So
so
I
that's the
like to
things you have
look
to
at
think
it,
about.
and you know, when it comes the way we've been moving through this conversation is telling, in that once you understand Bitcoin a little bit better and you understand sort of the fundamentals of it, you can start to track it in terms of how it performs in the marketplace. You can start to, as an investor, you know, strictly from an investment point of view, you can see how it absorbs the capital of the world, like, and how liquidity is moving towards Bitcoin and how it moves within the cycles of liquidity as well. And that's a whole other conversation. But once you start to understand how Bitcoin operates, you can start to look at these other companies, these other opportunities, these proxies, and you can get 2 times leverage, right? Or two times volatility,
Right.
which allows, from an options point of view, to increase your premiums. And understanding sort of how this asset sort of is performing, you know, as a baseline, allows you to have the confidence, allows me to have the confidence anyway, to invest in them when things aren't maybe going well in the equity side of things, right? And I almost primarily invest in these types of companies. And this is not stock advice. I'm just saying, like, this is the way I look at, like, there's so much in Bitcoin right now, and in terms of its fundamentals, right? In terms of its floor, right? And I think having a sense of these companies is really, really helpful. So I don't want to say too much about, like, you know, go hard on them, but you
They're
know,
worth taking a look at.
yeah.
And I would say maybe focus more on strategy. I think strategy is the one that's probably, if you want to invest through a proxy, through this kind of Bitcoin treasury approach, then probably study strategy first, right? All the other ones are, you know, interesting, but I
Yeah.
think strategy is probably the one you want to start with, because Michael Saylor has the most content out there explaining the case, and, you know, his strategy is being copycatted by every other company. So.
All right.
All right, just to close this off, right? So, and other ways to kind of get exposure to Bitcoin, not that we're recommending any of these, right? But they do exist, right? Is Bitcoin mining companies. Not a great investment, to be honest with you, but it is an option. It is an option you can pursue, and they do have great volatility if you want to do options trading. You can also do it through merchants or crypto exchanges.
Just on the mining, you got to be really careful. There's a dog eat dog world, the mining companies.
Oh yeah.
They are so cutthroat competitive. They have not been looking great moving forward. They were good in the last cycle, but it's very, very difficult industry.
It is very, very difficult. Yes. And to show you a visual, actually, telling this to Omar the other day, right? Sorry, let me just share my other screen here. So to show you a visual, right? So something that just happened late last week is just to show you, like, how difficult it is. This is a view of the power, or what's called the hash rate of the Bitcoin network, which actually also shows you the security of the Bitcoin network. And I just want to show you this over time, right? Since inception, right? This is the hash rate of the network, which is, think of it this way: the number of computers on the network that are securing and mining on the network. That's what this represents. And a hash rate is, like, basically how many
Revolution.
basically, not revolutions, but how many calculations of the Bitcoin puzzle we have running on the network. And this is an absolutely massive number. Like, this number represents 21, I think it's 10 million, like, it's, and one with 21 zeros after it, right, is what this number represents. But it just hit a new high last week. So
21,
this is the
21 zeros?
mining power. Yeah, this is the mining power on the Bitcoin network right now. So when people say, oh yeah, you know, the US government can take down the Bitcoin network, sure, but you need to come up with a network that has more power than this, right? And this is, I think it's hundreds of times bigger than the internet. That's how big this network is from a power, like, output consumption.
So they would have to essentially, shut off the internet.
They would have to shut off the internet. Yeah, and which you can do. I mean, nobody's denying that can be done. But how long?
What cost?
How long could you tolerate that for? And what would be the human and the commercial impact of that? So anyway, all right. So that's kind of that. Bitcoin proxies, and then Cam's favorite topic, self-custody, right? So okay, so here's the ways that you can get exposure to Bitcoin, whether you buy it directly or you just want.
Let's just. What's the purpose of self custody? Why don't I just buy it through an ETF or through MicroStrategy? Why do I need self custody?
Well, we talked about that already. But we can we because you want ownership over this asset. I mean,
Well, if you want ownership of this
yeah,
asset,
I
right? Like,
shouldn't say you
if you want to be the
ownership of it,
sovereign
yeah.
man, right? If you want to be the sovereign individual, right? Where you can literally take. So let's put it. Okay, let's draw the comparison today. You want to pack up, Omar, and you want to leave the Royal Bank of Canada, or you want to leave Canada completely. You want to go to a place where there's no taxes.
Okay.
How will that work? Like, could you just walk into the Royal Bank and say, okay, I'm taking my
No.
X dollars from my account? You would need some sort of approval. And you probably have, first of all, you have to walk in there on a Monday morning because it has to be open, right? That's the first problem. The second problem is, so you'd have to plan it, and then you'd have to get permissions. And then they may or may not give it to you all because they may not even have it, right? So if that concept is difficult for you, or so for example, it's perfectly fine. I'm happy, having all my money at the bank, and I trust the banks, even though banks in the US have many banks, and Canada has a much more stable banking system, but there are many countries in the world that do not, right? Look at the US. They're banks that have basically folded many times and recently, right?
SVB.
That's
Yeah,
right.
Lehman Brothers, Bear Stearns, Merrill
Silicon
Lynch.
Valley. Yeah, and I'm not even like looking at the Lebanons or any of these other countries where they, they have, other problems. But I'm just saying, like, let's just look at, like, I'm talking the U.S. market, right? So these are the banking system there. So and that's why we have FDIC insurance or CDIC insurance here, because they're securing the money that you have in the bank. But if you have more than 100,000 or more than 250 in the U.S., then in an account, then that's not secured. You will lose your funds. So if you want access to your funds, you want to safeguard your own money, and you have perfect control over it. And I use those words, carefully, perfect, right? Meaning, yeah, it's completely yours. You don't need to ask for permission. You can do peer-to-peer transfer over a safeguarded cryptographic protocol. You can send $21 billion on a Sunday evening from here to Tokyo, no questions asked, and it'll cost you $1.50.
Yeah.
If that's something that's appealing for you, then this is for you. Go ahead, Cam.
Yeah, no, I was just going to repeat the decentralized, permissionless, secure. If that interests you, if you want self-sovereignty of your wealth and be able to travel with it and move the world, have mobility, then self-custody is the way to ensure that. Otherwise, you're relying on centralized entities to give you access, which is, that's a choice you have to make. If that's okay with you, that's perfectly fine for many people to hold their Bitcoin in at a third party. And you just have to make that decision if that's something that's important to you or not. And that's kind of one of the beauties of Bitcoin, is that it allows you to have those conversations and ask those questions of yourself.
It's not for everybody, that's for sure, right? And if this is not something that you necessarily want to do yourself, and you want to just get the price exposure, or you want just to have the ETFs like the BlackRocks do it for you, that's perfectly fine. That's a personal choice, right? And not criticizing anybody. And I think at the end of the day, you do what you're comfortable with. I think what the only thing that's not okay is to be on zero. Right? You need to get off zero, and that requires you to take some action, right? So there's got to be some action taking here. And the first action is, okay, well, go study it, right? And while you're studying it, maybe dip your toes in and take some allocation. You choose how you want to do that. We're just trying to frame the opportunities that exist out there for you to get some exposure. How you choose to do it, feel free to come and ask if you still have questions. We're happy to help. But at the end of the day, get off zero.
Yep.
So
how are we doing?
If you want, I think we're good. I think we got a couple more slides here, and then we'll open up for questions, right? I just want to touch on self-custody, right? I think it's important that I've had a lot of questions on it, so maybe just touch on it, right? So now that we've framed what it is, and and it may or may not be important for everybody, but if it is important to you, there are ways for you to achieve this, and it's getting better, by the way. Back in the early days of the crypto world, right? It was a lot more cumbersome and difficult, and there were a lot of people left their funds on exchanges, and that's why you hear about Bitcoin getting hacked and people's money getting stolen stolen. Yeah, that's true, but it didn't happen because you self-custodied. You may have lost your keys. That's different. But if you know, for it getting stolen, the reason it got stolen is because you left it on the exchange and the exchange got hacked. That's a real thing.
Like
Absolutely, you can't deny that.
FTX, right?
Yeah, exactly. FTX, Quadriga, CX, right? There's tons of them, right? So and some of these are shady characters. Like again, coming back to the difference between the crypto market and the TradeFi market. The crypto market is not regulated, right? Unlike the traditional finance market. So when you put your money or your funds into an exchange like IBKR, well, there's a custodian, there's a bank behind the scenes. It could be JP Morgan or Citibank or one of your funds are sitting at the bank. They're not sitting with Interactive Brokers. So there's like a real custodian. That's not the case with the crypto world, right? So, shady exchange opens up and you push your money into shady exchange and you do the exchange of, Bitcoin or, or some other crypto, you buy Solana or Ethereum and you leave it on the exchange. You left it with shady exchange and shady exchange goes belly up and Mr. Shady disappears. Well, tough luck. That's reality.
Your shady becomes shitty.
Your shady becomes shady very quickly, right? So this is an alternative, and the idea, and I'm using Bull Bitcoin as for that reason because they are non-custodial, right? They will not, if you want to use their exchange, their business contract with you is you must give us an address where we will send the money to you, the Bitcoin to you. So this is how it works. I mean, it's very easy to do. Like you set up an account, you literally go to their website, you interact e-transfer. So you're sending fiat to the Bitcoin to the Bull Bitcoin exchange. They will take those funds, they will hold it there in your account. That's just like a bank account. They will hold your fiat currency. That will do. Then you at some point either want to set up a DCA on a daily basis or whatever the interval is. You can do it hourly, whatever you want, or you just want to buy once. So you just at that point it's just like buying US dollars or any other currency. Like you go to the bank and you say, I'd like to exchange my Canadian dollars to British pounds. Okay, well here you go. Give me the Canadian dollars, I'll give you British pounds. This is no different except it's in the digital world. You're giving me fiat currencies and I will give you the Bitcoin, the digital representation of that, and it will be based on the market price of that day. They take a little bit of obviously a spread as well. That's how they make their profit. But for you to do this transaction, you must have a wallet address. So now you have to make some decisions. If you want to be a self-sovereign individual, you want to self-custody your Bitcoin. Well, here's the tools that you have, right? And there's a ton of people on this call that can help you with that. Like, I see Ivan, I see, I know several others that have done this, right? So, reach out to them and show you how to. It's really easy to do. Like, it will literally take you a minute to set this up, right? So you can either choose to do it on your phone, which is what we call a hot wallet. And the reason it's hot is because it's connected to the internet. That's the only reason. It's just as good as the cold wallet.
Sorry, I'm just gonna put in the chat that the one of the BTC Sessions has a lot of online tutorials all about self-custody, all about all the technology, all the tech related. He's a Canadian. He has some amazing resources there. So BTC Sessions is wonderful.
Yeah, that's a channel on YouTube. He's a really, really good guy, Ben Sessions. So yeah, he has really good videos on how to set all of this. So you go to his video, how to set up a Blue Wallet or Sparrow Wallet or Aqua Wallet, but it's really quite intuitive. Like you download it from the App Store. Just make sure you pick the right one because there's probably some nefarious ones on the App Store.
Yeah, Blue Wallet.
Blue Wallet is very easy to set up. Like just download it, create a wallet, and then that gives you an address. You take that address, you literally just put it into Bull Bitcoin's wallet address thing and you say buy, and all they do is they take the dollars from your account, they buy Bitcoin with it, and they send that Bitcoin to your wallet. You've just self-custody.
And then you're holding it on your app it's basically that you're holding the keys to that Bitcoin in an app on your phone. And if you're at I think personally if it's like $4,000 or $5,000 worth of, okay, that's okay. But if you start to get into more than that, like 10,000, 15, 20,000, you might want to, I would be recommending cold storage at that point.
Yeah, and the difference in cold storage is just it's not connected to the internet. This is like literally a physical device, right? And just keep in mind, the Bitcoins do not sit in these wallets. I know they're cold wallets. They are called wallets, but they're not really. Your Bitcoin doesn't sit in there. Your Bitcoin is sitting safely on the blockchain. All this is a key for you to access the safety deposit box in the blockchain. That's it. So if you lose, we get these questions all the time. Well, what if I lose my? I can't. What if my dog eats it? Or okay, well. It's not a big deal. Like as long as you have your keys, right? So, the last thing we'll leave you with is the keys, right? This is probably the last chart here. Is your keys. You got to make sure you protect your keys, because this is really like, when again with digital world, like old world, you have a key to get into your safe at the bank or wherever you put your safety deposit box upstairs in your bedroom. No different in the digital world. The way it's done in the digital world is through something called a seed phrase, and this is exactly what it looks like, right? And it's literally words that look like this, right? So don't share your keys with anybody, right? If you lose your keys, you lose your Bitcoin. It's as simple as that. It's like giving your safety deposit key to a complete stranger. So nobody to blame but yourself if you lose your keys, right? Simple as that. Again, and maybe closing thoughts, right? And we'll open up for questions, right? Just study Bitcoin. It's worth it.
Read the Bitcoin Standard.
At least that. Yeah.
Study and learn about Bitcoin. Build your balance sheet with Bitcoin. Embrace change. Break free from school, traditional models, old products, old ideas, and people. Embrace change. I think it's like adapt or die is sort of like it's a hardcore analogy, but look what's happening, guys. Like, it behooves you to educate yourself on that. So hopefully this has been helpful. I don't want to wrap this up too early, but let's take some questions perhaps.
Yeah, let's do that.
Any questions, guys? Ask now. Otherwise, it's been a bit of a.
I want to answer one of actually Ivan's question, right? He was asking about, Michael Saylor has this prediction or this forecast, right? And he's done some work on forecasting price of Bitcoin, right? So, you're saying, Ivan, 13 million by 2045, right? Is that reasonable? So if you want to actually look at, I'll show you where this is coming from, right? So if you go to Michael Saylor has a website, and his website, actually, I'll show it else. It's just basically literally michael.com. And you'll see that he has a presentation on there that describes, he did this at the Bitcoin conference recently. And if you go through this, you'll see that he kind of lays out the case for Bitcoin. And in there, if I just fast forward, sorry, I'm jumping ahead here, but in there, he actually does a price prediction, right? This is what Ivan is talking about, right? So he puts a price prediction, and there's a whole, he's published all of this publicly. So he actually wants people to go and look at it and challenge him on it, right? But he's made a price prediction, and this is the price prediction, right? 2024, when he did it, was $65,000, the Bitcoin price, and his bear case by 2045 is 3 million.
When was this presentation, Wasim?
This was
sorry.
This was at the Bitcoin conference. I think it was in May 2024.
This is last year.
It was last year. That is correct. Yeah, but he keeps it up to date, and he has not changed his forecast on this. So
what was that price target again? Wasim?
The price target
is the base.
No, by what time frame?
2045. 2045.
2045. What about a little more near-term target? Well, we're not, who knows what's going to be around by 2045?
Yeah, his near-term target is up from here, but I think it's all kind of predicated on what sovereign wealth funds do, right? So the fact that the SBR has been stated, I think his last forecast, I think he was talking about a million, right? But I think he was saying like next year, not this year. So, but all the data is there. Like, I'll put the link in here, and you guys go check it out and study what he's talking about again. Like, but this is all, there's a lot of really good stuff. This is why we're suggesting to look at strategy, because if you really want to learn about Bitcoin, looking into strategy as a company and what they're doing is very useful information to understand Bitcoin. Because for you to invest in strategy, you got to be bullish on Bitcoin. Like, nobody's investing in strategy because they like their IT company and their data analytics business. Nobody cares about that stuff, right? I mean, it's nice. Maybe in the future it becomes something, of value, but right now nobody gives a crap about any of that stuff, right? Everybody who's investing in MicroStrategy is extremely bullish on the Bitcoin case. You're not investing in MicroStrategy.
There is a whole ecosystem, a whole like they're not underground. I don't want to say that, but there's this diehard group of investors who are focused on MicroStrategy and only MicroStrategy, because from their point of view, if you're looking at the Mag 7 and you're trying to understand the Mag 7 and you're trying to understand real estate and you're trying to understand Bitcoin and you're trying to understand MicroStrategy, you can't keep up with all that. What's going on with MicroStrategy is so different because of the convertible bond offerings they're doing and these bonds that they have. Right? I don't fully understand them. I'm trying to I don't have the time to get into it too deeply, but there's so much going on there, and there's communities devoted to what MicroStrategy is doing and understanding how this new company that exists out there is gonna work, is how it's gonna work in the world. So one of them is what is it called? I think it's called Strategy True North. I think it is MicroStrategy True North.
MSTR True North.
MSTR's True North. Yeah.
That's Jeff what's his name? Jeff Walton. Punter Jeff.
Hunter
Yeah,
Jeff.
he does some great stuff on this stuff. But you're right. Like the once you get immersed in this space, you'll find, first of all, the demographic is a little bit younger than us.
It's wide.
But
look at there's some older folks in there, no
but the
doubt.
OGs, the OGs have been around, like they know their stuff, right? So some of these, I mean, you have to understand, like some of these folks used to be around when Satoshi Nakamoto was kind of setting this thing up, and they were interfacing with him. And those OGs are still around today. Right?
Is Josh an OG, or is he? I know that he was a TradeFi like hedge manager, Josh Mandel.
Josh Mandel. No, I don't think he's not an OG. Like he joined recently, right? Yeah.
And
but Adam Back is an OG, for example.
Oh yeah, but
Adam
I don't think
Back runs.
Is he a hardcore strategy trader?
No, well, at least if he is, he isn't saying that, right? And by the way, like Adam Back, he's the CEO for this little gizmo here, Blockstream. So so that's why a lot of Bitcoiners buy Blockstream, because they trust Adam Back. And by the way, this product, the Cold Card, that actually is produced in Canada. That's a Canadian. That is the best cold wallet, sorry, that exists on the market for Bitcoin. That is the go-to for Bitcoiners, right? And it's a Canadian product. You'll see that at the Bitcoin conference in October.
Montreal,
be there. All right, I think that kind of wraps things up. And yeah, I think Ivan, I think the 13 million, you gotta do your homework, man. I mean, everybody's these are targets. There's lots of different numbers out there, and you gotta do your homework. But all I know is the number, it's up from here. So again, it comes back to simple supply-demand economics, and it's hard to believe that. I mean, where we are today, I mean, there's a lot of skepticism about why Bitcoin hasn't taken off yet, but it's in its early days, right? It has proven itself over the last 15 years. It has a lot to demonstrate this year, but I think we're at a very pivotal point. I've been in the space for quite some years, and I definitely feel that this time is different. There's so many tailwinds. I don't know how you feel, Cam, but there are so many tailwinds in the space.
Yeah,
I don't think the price is reflective of that.
No, and guys, it's like Bitcoin is a liquidity suck. It's like a sponge; it just sucks it up. And I'm telling you, like the liquidity it's all based. The prices of Bitcoin priced in US dollars is just a reflection of how debased the dollars are becoming. So there is an onslaught of, I think there will be more money in the system coming. We're entering that point, right? They're starting to talk about quantitative tightening ending, right? QE is on, we're heading when, recession hits, if we get more of these days of this type of thing, they're going to need to inject into the system, right? And I don't like to say that that's what's going to cause it to pump, but that's going to go right. That will affect risk assets, all assets, and Bitcoin will be poised to absorb that liquidity. So stay tuned.
It's an emerging asset class. It's a new asset class. It's called a scarce asset class, which is actually quite new. It's unique, right? So we'll see where it goes. Some further reading here, some big names, and one interesting name, actually, you may look him up also on YouTube, is Greg Foss. He's actually Toronto guy.
Been quiet lately.
He's been quiet, but he has some personal challenges. But great guy. But he's got some really, really good YouTube videos out there on this topic, as along with Jeff Booth. Yeah.
He's Canadian too, right? Jeff Booth from Oakville?
Yeah. Jeff Booth is also in Toronto. Yes.
No, he's Vancouver.
Is he?
Yeah, he lives out west.
He's Canadian.
He's Canadian.
Yeah, and so I think they have some really, really good material out there. And Lynn Alden is another great voice in the space. Saifuddin Ammous obviously wrote the Bitcoin Standard. So it's a really, really good. There's a lot of information out there, but it boils down to really just basic education. Like you need to. It's new. It does require some cycles to get educated on it, to get convicted. My only recommendation I'll leave you with is, invest, get off zero and start the education journey, right? Because I think the opportunity is there. And as Greg Foss says, if you just look at the total capital pool globally, right? If even just 1% of that, like we're talking 900 trillion, right, Omar? Some 900 trillion.
Yep.
If 1% of 900 trillion, right, that's $9 trillion, right, moves into Bitcoin, 1%, right? You're going to 4x or 5x the actual market cap of Bitcoin today.
Yeah, 100%. Well, just one last question before we wrap it up here, guys. Duncan has a question. I just have a question about where you see these Bitcoin price predictions out in the future. Is there some assumption about how much the USD or CAD is devalued due to inflation that far out? That's a very interesting question. Because if you're looking at 2045, the value of a dollar today is not going to be the value of that dollar for 2045.
Yeah.
I'll let you guys answer, but I think it might be a moot point. If it hits 13 million, even if inflation were to double, it wouldn't be, or triple even, it wouldn't be that much of a difference. But maybe you guys can comment.
I'd love to just take that. Look, if you measure, it's all about the measurement tool that you're using to measure value in the world. If you're using the US dollar as your measurement tool for value, it's a distorted measurement. Bitcoin is a accurate measurement of not in US dollar terms though. It's what can Bitcoin buy you, right? Like if you were to say what's a house worth? It was, 8 years ago, you could buy my house for, say, these are fake numbers, but just say 5 Bitcoin, right? Or 8 Bitcoin. Now it's like, say it was 20 Bitcoin. Now it's like, 5 Bitcoin, right? And then that's going to be 2 Bitcoin and half a Bitcoin and a quarter of a Bitcoin. So it's what can you buy? What is Bitcoin worth, right? If you're measuring it in the US dollar framework, you're measuring it from a distorted system. You're measuring it from a manipulated system. So Bitcoin is that repricing the world. So that's the way I would answer it. Basim, what do you think?
Yeah, I think you summarized it well, right? And what I would recommend, Duncan, is look at this. So the forecast that Saylor put out, all of his material is public, right? And you can inject the inflation rate that you think will exist moving forward, and then look at the Bitcoin price relative to that, right? So he's made some assumptions, absolutely, around what that looks like, what debasement looks like. Because you're right. I mean, it's the Bitcoin price. And Saylor, actually, if you follow his Twitter account, he always tweets this out like quite regularly. He says 1 Bitcoin equals 1 Bitcoin. Like he always says that. And what he means by that is the value of Bitcoin never changes. It's everything around Bitcoin. This is what Cam is trying to articulate.
Yeah.
It's the world around Bitcoin that's evolving. It's just like a bar of gold is a bar of gold. Like it'll always have the same physical characteristics. It doesn't change. That's the beauty of gold. It doesn't change. And that's what you want. Like you want the thing that you're putting your time and energy into to not change. You want to preserve that over time. So Bitcoin is that in a digital representation. So when you talk about the price relative, the fluctuations in the fiat price, the US dollar price of Bitcoin, yeah, absolutely, that's a function of M2 money supply and also debasement and inflation rates and all that. So in his calculation, you can download it and you can run your own modeling to figure out what that looks like. It's quite sophisticated. It's actually quite interesting if you're, if you want to do it. But he's given his assessment of what he thinks that looks like based on his parameters. And the deck I showed you there earlier is probably a good one to kind of go to if you want to get a good view of what he did there. This one here. So I posted that. It's on. If you go to michael.com, it's this one here. There is no second best. So he's got the packages there. There's tons of, it's a 94-page deck, and he walks you through every detail of what he did, what assumptions he used here.
Hey,
But you can see like AIR is 29. The real AIR is like 60%. Go ahead, Ken.
Sorry, Wasim, I keep interrupting you.
Okay.
Duncan, I think it's a really great question, and I would encourage you to go listen to Jeff Booth. Of anybody in the Bitcoin space, Jeff was fundamental in transforming the way I was able to see value in the world. and how
Yeah.
and what we're trying to touch on here. And I would encourage you to just Google Jeff Booth and listen to some of his interviews and listen to some of the ways he explains the answer to your question there. And I think you'll find it valuable.
Okay, guys.
Absolutely. Yep.
Thank you so much for your time, everyone. Have yourselves a fantastic night. Thanks, Cam and Wasim, so much for enlightening us again on Bitcoin. This will be available for replay on YouTube, so please watch it or share it with anyone you think. Thank you guys for those joining us tomorrow. We'll see you tomorrow. Take care, guys.
Take care.